What if you could see the most important information about the market, all in one place? Market trend, multi-time frame direction, market strength, important swing highs and swing lows, liquidity zones, fake breakouts, entry confirmations, and alerts, all inside one powerful tool. But let me show you why this indicator is different. First, market trend. Before looking for an entry, you need to know one simple thing. What is the market actually doing? Is it bullish? Is it bearish? Or is the market currently neutral? This indicator gives you a clear view of the market trend, so you can understand the direction of the market before making a trading decision. But there's more. This is not limited to a single time frame. With its multi-time frame analysis, you can see the direction of the market across different time frames, because a bullish move on a lower time frame might simply be a pullback inside a bearish, higher time frame structure. And this is where multi-time frame analysis becomes extremely powerful. Instead of looking at the market from only one perspective, you can step back and see the bigger picture. Now, let's talk about the heart of the system, swing levels, the important highs and lows of the market. These are the areas where market structure becomes visible and where price often reacts. The indicator identifies important swing highs and swing lows and turns them into clearly visible levels on the chart. So, when price comes back to one of these important swing levels, you immediately know that something important could happen here. But this is where things get really interesting. Fake breakouts. One of the biggest traps in the market is a breakout that looks real, but isn't. Price breaks through an important level. Traders enter. Everyone expects continuation. And then, suddenly, price reverses. What looked like a breakout was actually a fake breakout. This indicator monitors how price interacts with important swing levels. When price attacks a swing level but fails to produce a confirmed real break, the fake breakout, or FB, is marked directly on the chart. And this is extremely important, because the FB is not just another signal. It tells you that price attacked an important level, but failed to break it properly. Liquidity zones. But swing levels and fake breakouts are only part of the picture. Another major component of this system is liquidity zones. These zones help you identify important areas where liquidity and significant price reactions may occur. Now imagine putting everything together. You have the market trend. You have the higher time frame direction. You have an important swing level. Price enters a liquidity zone. Then price breaks the level, but fails to continue. Fake breakout. Now you're not looking at just one candle. You're looking at the entire story of price around that area. Entry confirmation. And this brings us to another important part of the system, entry confirmation. The goal is not to enter a trade every time price moves. Instead, you can look at the trend, the higher time frames, the swing structure, the liquidity, the price reaction, and the breakout behavior, and then decide whether the setup is actually worth considering. The indicator doesn't make the decision for you. It gives you more information, so you can make a more informed decision yourself. And finally, alerts. There is one more problem every trader knows. You can't stay in front of the chart all day. The market doesn't stop moving just because you're away from your screen. And you shouldn't have to spend hours waiting for price to reach an important level. That's where the alert system comes in. When important conditions occur, the indicator can alert you. So instead of constantly chasing the market, you can let the market get your attention when something important happens. So, what do you actually get? Market trend, multi-time frame analysis, market strength, swing highs and swing lows, important support and resistance levels, liquidity zones, fake breakouts, real breaks, entry confirmation, and an alert system, all inside one tool. But what makes this indicator powerful isn't simply the number of features. It's the way all of these pieces come together. Because when you can see the trend, when you can see the higher time frame structure, when you can see the important swing levels, when you can see liquidity zones, when you can see how price attacks those levels, and when you can distinguish between a fake breakout and a real break, you're no longer looking at a chart as just a collection of candles. You're reading the behavior of the market. And that's the real purpose of this indicator. It doesn't claim to predict the future. It doesn't trade for you. And it doesn't replace your own analysis. It gives you the information you need in one place, so you can understand the structure faster, identify important areas, recognize fake breakouts, evaluate market strength, compare multiple timeframes, and make your trading decisions with a clearer picture of what the market is actually doing. This is more than just an indicator. It's a different way of looking at the market, because the market is always leaving clues through its swings, through liquidity, through breakouts, through fake breakouts, and through market structure. The question isn't whether the market is telling you something. The question is, do you have the right tool to read it? Welcome to a different way of reading the market.